Hello and welcome to this special show called The Street View. The GST has been dubbed as one of the most crucial tax reforms since independence, and while no one is denying the long-term structural benefits, the street, Ajay, remains nervous about the short-term disruptions that this tax regime could bring with it.
Well, that's correct, and in fact that's the reason that over the next half hour some of the sharpest minds will help us understand what the GST means for market investors and how should you be positioning your portfolio as we usher this really major reform for our country. Joining in today on our show would be some of the marquee investors in the market, Inam Group's Vallabh Bansali, Edelweiss Group's Nilesh Shah, Kotak AMC's Nilesh Shah, and Punita K Sinha of Pacific Paradigm Advisors will also be joining us on the show. So gentlemen and the ladies, thank you very much for your time for this special telecast on ET Now today. Mr. Bansali, let me start with you. GST is seen as the most revolutionary reform since India's liberalization all the way in 91, and you have observed that also play out in the economy. What can GST implementation mean for our country's perception globally, because almost everybody in the world is watching out for implementation of this size and scale, the reform which we are talking about?
I think GST is a revolutionary reform, and it basically integrates India. Now, this question of integrating India is a very big one, and if we have to see it in the right perspective, that just as one political India had to be created, then a liberated India had to be created, and now you're creating an integrated India from a business point of view, and that explains the enormity of change and the enormity of difficulty. So I think whosoever conceived, several people have contributed to the development of the current GST law, and all of them have to be complimented for thinking of one India. I think therefore it's a huge thing, and maybe we are looking at some difficulties or some other countries, but in the case of India, a large country with its history, this is going to be a very, very big thing.
Right, but Mr. Shah, the fact is, and I'm talking to Nilesh Shah here, Mr. Nilesh Shah will come to you in a bit, the GST jitters are very evident on the street, whether you see, the way the market has been behaving, or forget that, even traders around the country today, as we wait to usher in the reform, are up in arms. There are worries over dislocations. Are they overstated or are they for real?
See, overall, I think it's hard to say market on an everyday basis. I think on a short-term basis, markets always want to climb a wall of worry, and markets have done well over the last few months. So I don't see too much into this disruption part and all, because there is a little bit of disruption. But India, we are changing, adapting all the time. So there is a little bit of disruption. But the key question to ask is this disruption for the better? So I think 3 months down the line, 6 months down the line, there is going to be a huge amount of benefit out of it. And I think all kinds of investors believe that GST is a big significant move and have a huge positive economic impact on India. So I think this short-term disruption or apprehension that is there in front, ahead of any change in India. But I think a lot of this is for positive. I mean, every time there is a new rule, whether it's a real estate bill or GST or anything else, there's a lot of apprehension about old ways of doing things will have to change. But a lot of this is good for the country, and we'll actually reap a lot of economic rewards for all of us.
Right. Nilesh, let's start by understanding how the street is really viewing, how are they positioned right now. Didn't look much nervousness on the street today. How much of these benefits which we keep talking about over the long term are already in the price?
So the long-term investors, as Vallabh mentioned, are looking this at very positively. Even a critic like Jim Rogers, who has been consistently negative on India, has accepted that GST introduction is something which he had not accepted. So clearly long-term investors are feeling the benefit of integrated India. On the other hand, retail investors who moved out of market post-November and December demonetization experiment, clearly they have realized their mistake, and from their experience other retail investors will also learn that if there is a consolidation or correction phase in market because of some big event like GST, it's actually an opportunity to increase allocation to equity rather than taking money out of equity. So if I put the retail investors and then long-term investors in both domestic and global markets, I think more or less they are accepting that one, GST will cause little disruption. The inventory levels have come down across India in many industries. Production levels consequently has also come down a little bit. The IIP numbers for the month of June could be a little bit subdued. The June quarterly results might be a little bit subdued because of either transition hit or either because of drop in inventory and production. But these are all necessary pain which we have to take in the short term, because over a period of time this will be a long-term beneficial. So investors are looking positively to GST, and fortunately even retail investors are behaving in a much more matured manner compared to November-December demonetization exercise.
Punita, let me ask you this then. Is that a feeling that resonates with, the foreign community as well? Because the fact is, if you were to look at June, you've seen FIIs who've been sellers for almost 13 sessions, of the month. Of course, it could be because of various reasons, but there is a little bit of skepticism, isn't there, about what at least the short-term dislocations could be as a consequence of GST?
Well, I wouldn't say that the foreign investors are selling because of GST. I think most foreign investors were very overweighted India in their portfolios. Recently we've seen some money flow into China and Korea. And that's not necessarily because of GST in India. It's because the valuations in some of these other markets were more appealing. The economic near-term positives were also emerging in some of these other economies, and India was already overweighted. So I think that's one of the reasons that there has been some selling in India by the foreign investors. In fact, foreign investors do generally view whether it is demonetization, whether it is a GST, as a very positive move for India's economy, because the two main concerns in India were that there was a very high level of cash in the economy, and there was a big parallel economy, and tax compliance was an issue. So by these two moves, we have seen a very clear vision that the parallel economy in India is going to become marginalized, and that would mean very positively for the long-term GDP of the country, in the long-term fiscal situation of the country. So these are long-term, very important measures for India. But of course, in the very short term, there will be some uncertainty around the earnings for at least one quarter, because I don't think even the companies, now I'm talking, as a board member of many companies, I'm seeing that most companies are very well prepared. But even if you ask each company, their reaction to the GST is quite different. So some companies are seeing a working capital increase, some are seeing a huge benefit on their input costs, but they still don't want to bring down prices. Some will see prices, taxes go up, and therefore they will pass on increased prices. So I don't think anyone really knows exactly how their earnings will be impacted. So there is some uncertainty around that. And the second uncertainty is around inflation, because if prices do go up on the margin, then that could be inflationary. That means, what does that do to interest rates? So those are some of the concerns, but generally very positive moves.
Right. Punita, let's try and understand it a little more specific. Even if we assume, as the street, several brokerages, you talk to whatever agency, they say 1 to 2 quarters could be the sluggishness in the numbers. Would it be right to believe that at least a fiscal 19 would actually start capturing meaningful benefits of GST, the objective it started out with, and the government wanted to implement it seamlessly? Even if we take FY18, not the year, would it be right that FY19 would capture the benefits?
Well, I think there will be some companies that will benefit for sure, but there may be others that may not benefit as much. And we've seen, the rates for some are going up quite significantly, and it's not clear whether they'll be able to pass it on fully to consumers. And if they do pass it on fully to consumers, whether consumer demand will get impacted negatively. So I think there will be definitely some sector beneficiaries and some sector that will not benefit. So, but the earnings impact, I think in FY18, why even wait for FY19? I think you'll start seeing the earnings impact within 2 quarters, but then there'll be some adjustments. Companies will go and make representations. So I think the full picture will emerge in a year or so, because there will be a lot of adjustments that will happen as well, and rates will change, I think, as companies themselves figure out what's working for them and what's not working for them.
Right. Nilesh, let's talk about a point that Punita was making about whether or not GST will stoke inflation. If you were to just study, whether it's Malaysia or any other country in the world that's rolled out GST, you did see inflation temporarily go up. In fact, a very reluctant, Hasmukh Adya also did tell us that, hey, look, you could see some sort of price pressure for a year. Is that a big worry for you? Because, many then wonder what that will mean for the way ahead for the RBI.
So, I really don't know how the GST's basket will impact consumer inflation or not. But let me just point out one peculiarity in calculating inflation. Recently, central government announced HR allowances increases for its employees. Now, the way HR allowance gets included into our CPI basket is that it's taken, at every 6 months interval. In the first half, it is taken for half of the state, and the second half, it is taken for another half of the state. So effectively, even though HR allowance has been increased in the month of June, July, the impact will be distributed in 2 parts, because it will get calculated over, half of the state in first half and other half in the second half. Now, this being the case, my feeling is that inflation, at least for the near term, looks like reasonably subdued. It's well below RBI's inflation target of 4%. The latest number was 2.18%. And even if there is marginal, up move because of GST related movements, because of the anti-profiteering clause, I don't think so it will be significant. So on inflation side, I think it will remain subdued with GST, without GST.
Rashesh, daily course of business, you interact with all kinds of corporates, mid, large, some of the SMEs. What are your channel checks telling us about the readiness for GST? At least the many corporates we get on our channel, we get a mixed opinion, especially the large ones seem ready, but mid and small ones perhaps not as much. What are your thoughts on this mega adjustment on the taxes which entrepreneurs are gearing up for?
I think what we are hearing from the government, and only last week I met some people, the estimate is about 65 to 70% of the people who are covered under GST are currently ready. They've also taken the system accreditation and all that. I think 20-25% will not be ready, but also remember this will not happen on 1st of July.
The council का dinner है जिसमें माननीय प्रधानमंत्री जी भी शामिल होंगे राज्यों के वित्त मंत्रियों के साथ, और कुछ नियम ऐसे थे जो नए बनाने थे कल से जीएसटी लागू करने की दृष्टि से। उन नियमों को काउंसिल ने अपनी स्वीकृति दी है। इसके अलावा केवल एक विषय जो कई राज्यों की तरफ से उठा था कि जो फर्टिलाइजर पर जीएसटी प्रपोज्ड है उससे कहीं फर्टिलाइजर की कीमत में थोड़ी सी वृद्धि ना हो जाए, और इसलिए जो पहले रेट तय किया था वो 12% था। इसके खिलाफ कई रिप्रेजेंटेशंस आई थी जो काउंसिल ने कंसिडर की। मौजूदा रेट कितना है, हर राज्य में कितना असर पड़ता है, क्योंकि कुछ राज्यों ने उस पर कम रेट रखा हुआ था, और उस सब को मद्देनजर रखते हुए ये तय किया कि फर्टिलाइजर का ऊपर जीएसटी जो रहेगा वो 5% रहेगा, 12% नहीं रहेगा। ये आज काउंसिल की मीटिंग का महत्वपूर्ण निर्णय था। इन टुडेज मीटिंग ऑफ द जीएसटी काउंसिल, some additional set of rules have been approved, and there was one major decision which was raised by, in response to a number of representations, against the 12% rate on the GST. Some felt that it may increase the burden on the farmers itself. And therefore, after a consensus was taken, and the consensus in the council was to bring the rate down to 5%, so that the fertilizer price, if at all comes down, it doesn't go up.
Okay, sorry about that interruption. We, of course, cut across live to the Finance Minister. But Mr. Bhanshali, let me ask you the next question. You know, we promised our viewers at the start of the show that we will talk about how one should go about building their portfolio on the back of GST. From an investment point of view, where is the opportunity? And I'm asking because whether you look at some of the logistic companies, the consumption plays, they've all run up quite a bit, and these are the ones that are being seen as a direct beneficiary. So if someone was to invest now, is there still a case to look at some of these companies?
I think all these are short term, that if somebody will make 1% extra or lose 1% extra. I think in the long term that doesn't mean much. Long term, clearly it is the macro benefit that will matter, that if tax to GDP goes up, and then we are able to use that tax for essential reforms or essential areas like infrastructure and education, that will be a huge benefit. Long-term efficiency in terms of the tax to GDP not only goes up but sustains and keeps going up at a certain gradient. That will be the macro case. And most importantly, you're going to see a lot more transparency in the economy. It won't happen overnight. But I think those will be the cases that slowly we will be considered rather a developed country more than a developing country. So that's the dividend.
Nilesh, we also saw consumer stocks get very active, tobacco companies, large conglomerates once again, despite of the fact everybody knowing that a large section of this particular tax impacts the consumer end of manufacturers. Do you think that meaningful tax benefit will accrue to them, if not directly in terms of taxes, then at least on volumes front, because consumption and demand would increase, and hence some more allocation would be made in favor of consumer names in the market?
Undoubtedly, this is game about volume expansion rather than price expansion. Today we have seen across various segments, small and medium enterprises giving competition to large enterprises, not because they are more productive, but because they are able to arbitrage tax differences. Many of the small and medium enterprises don't pay minimum labor. The difference between Chittiwali salary and the official salary is pretty large. They arbitrage tax through avoidance of various kinds of taxes, and that's where a power loom in Bhiwandi gives competition to composite textile mills. A tile unit in Morbi gives competition to large tiles company. With GST and demonetization together, one, movement of cash to settle trade payment is becoming difficult. Second, your ability to avoid taxes will get curbed significantly. And this will result into shift of businesses and market share from unorganized sector to organized sector. This will be visible in various consumer sector. This will be visible even in industrial sector. So over a period of time, there will be shift of businesses and market share from unorganized sector to organized sector. This will be visible in textiles and garments, chemicals and special chemicals, auto and auto components, building materials like tiles, cables, wires, consumer staples, consumer durables. So this is one big theme which investors will look forward to. Whether it comes 3 months early, 3 months behind, that only time will tell. But this is one thing which investors are betting upon.
Nilesh, I also want to get a sense from you on the anti-profiteering clause, which again, sort of has this fear of the unknown tag attached to it. There is a worry in one section, of the market that this is going to give wide sweeping powers, as it were, to those who are on it. Is that an unfounded worry, or do you suspect that there is a way maybe, that it could be misused?
So there is a cross-representation in the industry. We met one industrialist who said that today my product cost is 1 rupee. Because of GST, it goes to 1 rupees and 12 paisa. But there is no coinage available to charge 1 rupee and 12 paisa. So either I can keep it at 1 and suffer loss, or I can go to 1 rupee 50 paisa and invite anti-profiteering. On the other hand, we have also met certain industrialists who are saying that yes, we will take anti-profiteering seriously, and we will use the savings to promote advertisement, which will be good news for the media companies. We will use this reduction in tax rates to pass price benefits to the consumers. So my guess is that today people are a bit apprehensive, but I think over a period of time they will all find their level. My guess is that one indirect beneficiary of this reduction will be increased allocation to advertising and brand and promotion expenses.
Right. Punita, I would like to understand from you, when you interact with your, the friends overseas, people who are running money in India for some time now, there have been a slew of reforms which the government has undertaken. Some of them FIIs have understood and endorsed much more than many domestic managers and market participants. Once this really big one, which has been taken up after a lot of tug of war between opposition and the government, is also gets into the way, what are the next on agenda from the government side in terms of reform which you expect, or at least FIIs in general are watching out for?
I think that the macro story in India has always been considered very positively over the last 2 years, and in fact that's the reason why we see markets where they are. So the macro story is already fairly well discounted into the market valuations. I think at least from a foreign investor perspective, India was one of the best macro stories, and now I think the focus is going to be more on how it's all going to get implemented and what it means at the micro level, what it means for the consumer, what it means for the companies, and how it's all going to sort of pan out. So I don't think a lot of further macro reforms are being really expected, because I think the focus is let's get at least these done properly. Inflation and interest rates, I think, is really what people are watching. In fact, there is more concern arising on the geopolitical side with respect to Kashmir and Pakistan. I mean, I was recently at a Council of Foreign Relations meeting in New York, where while discussing India, the UN Secretary General was asked what is the big, what are the big worries in the world today, and his big worry was India versus Pakistan as one of the big global worries. So I think geopolitical issues are taking some attention away from the positive macro story in India. So I think that's really what's on the investors' minds right now.
Right. Mr. Rashesh Shah, what about growth? What sort of a fillip could GST possibly provide for GDP growth? Say for FY19, as we were discussing, perhaps it's only by then that we will see the real fruits of this labor.
I think our estimates are from 18-19 onwards, India should cross the 8% GDP growth rate, because also along with GST, along with our economy was already improving, consumption is on an uptick. If this year rainfall are going to be good, even the loan waiver, which has been a bit controversial, will also result in maybe increased consumption at the rural level, which will be good for the economy. And lastly, let's remember that the global economy is also improving. The global economy is on an uptick, commodity prices are firm. So when you add up all of that, and with the fact that oil price is low, India's inflation is low, we do think that by 18-19, India should cross 8% GDP growth rate, and who knows, if things go well, it should be even higher than that.
Right. Mr. Bhansali, we'll let you have the last word on this discussion. What would your message be to all our viewers and investors who are watching the show on how to brace for a new India under GST, as you may understand well that many people among our viewers, among the business community, market participants, all of them are very anxious and some nervous about this mega tax change?
I would say there is no reason to be anxious. This is one more thing. We have moved from 91 to 2017. Lot of things have changed. You should be focused only on the long term and good managements. That's it. GST is just one more comma.
All right, on that optimistic note then, we'll wind up this special discussion on the street view. A big thank you to each one of you for joining in.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/ETNow.